Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Linn Associates with your financial market wrap-up for a very volatile Monday, the 5th of February, 2018. We're about 4:40 p.m. Central Standard Time. These numbers are not wrong. That's where the market's finished. And down hard, without exception. Down very, very hard. It's as though somebody rang the bell and said, Fed Chair Powell, we want to welcome you to your new position, and away the market goes. Yes, we have a new Fed Chair. So what does it really mean? Well, it's a correction. There's no question about that. How deep it goes? Well, some of the markets could approach that 10% or go beyond that. I doubt that you're at a 20% correction or anything of that nature. But what I had said to so many of you and so often, especially on Fox Business, BNN, I had said it in Sky, I can go on and on, Wall Street Journal. I said this market was front-loading so much good news in January of every day of everything going up, and I'm reading articles, be it in Barron's, the Journal, wherever you're reading, Financial Times, and people were abandoning insurance strategies. Well, the VIX just showed them. Don't abandon them. Up 106% in the VIX today as those insurance policies paid off. What's really happened is we were talking, was the market setting a trade bottom, and was the VIX reaching for new highs on those levels? And that's what I told you on each of the videos over the past week and a half that I think was going on, certainly the last 4 or 5 days. And I hadn't changed my opinion. As it turned out, that analysis was on the money. And over the weekend, I did some price count studies on where the stock indices might go. And in tonight's research for my subscribers, if you get my research, you'll get it. I'll show those so that you get an idea of where I think the markets might be headed. So let's take a look at the weekly area chart of closes. And there's one glaring thing you have to take a look at. Since the president's election back in November 2000, right here, where he took the office, the market has rallied and rallied very smartly. So right here when he won the election, it had rallied. And this is, as far as I can see, the first weekly close since that event has taken place. We're getting back to a point where the market is saying maybe getting 25 times earnings on this stock, more than that on some other stocks, maybe reaching for the sky. While we've all believed that, you could, but markets do fall back to earth, and as I wrote in my letters this past couple of weeks, gravity works, and now you see it. Does this mean the market's going to fall out of bed? No, but it does mean that the market's cut through a bunch of these reaction points, and what I think you've done is you have established a trade top that will stay in place for quite a while. When I take a look right here at that down move and you follow through, look at this break. And when we put the swing line on, you get an even better story. The market got itself into its first bit of trouble right here when we made the lower low. Now that was on January 31st. It seems forever ago, right? Well, today's only February 5th. There was no sell signal on the swing line, but there was a signal that said the trend had ended, and the trend that began right here with the pattern of higher lows and higher highs up until, actually it was right, I believe here. This day's when you hit 28.1850, so it was really the 30th where that happened. Now, had it gone back up, it's still not an uptrend. You got a lower low and a higher high. So that was the warning signal. And as you can see, it started working on itself. And I doubt that anyone thought today was going to end up like this. If they did, God bless them, good job. You sliced through the 18-day average on Friday. And today you would assume that one of two numbers might have supported the market, be it the Bollinger Band or the 100-day moving average of closes, because that's what's been happening. Didn't happen today. You went right on through as you can see, the 100-day average, and the Bollinger Band number, well, you hit it today. You hadn't hit it on Friday. Normally, how this market's been working is you could get up or over it, and you did that in this case, and now you're over it by quite a bit. Do I think it'll stay over it for a long time? I don't. But that means this band's going to probably drop even more and the market work to the right. You have done damage to the market, and when we look at momentum, you're quickly oversold. So here's what we've done. You've wiped out a lot of trade. You've hurt the people that came in the month of January, and anyone that bought fresh in the month of January is underwater in early February, which tells me that on the way back up, there are probably people that are going to want to lighten themselves up, and I'm going to stick with my idea that a trading top was in the making and it's now here. A market that was different was the Nasdaq. This is the close of business Friday. This was the close of business Thursday. You had already your swing line down, but you hadn't closed under the 18-day average. You did here. If you went short the market at 68.58, if given the opportunity, your risk was back to 69.92. That's quite a bit of risk, but that would have been how it shaped up. It never let you in there. The market worked its way through the Bollinger Band. The next stopping spot, if there's further pressure right now, should be the 100-day average. And just like we looked at the S&P, we have an oversold market. Got it? In the Dow, let's go back and take a look. This is Friday's action. There was nothing bullish on Friday's action. You had lower highs, lower lows on a daily basis. You were under the 18-day average. So the trend is down. The bias is down. I think that most traders would have been looking first for the Bollinger Band, and I doubt that anyone was looking for the 100-day average. Yes, it could always happen, but I doubt it. You were already at a 31 stochastic. If you got even to the Bollinger Band, you might be a bit oversold. You sliced right through that today, and you went down to that 100-day average, and in fact, with the close today at 25,431, you're a bit over that number. So the 100-day supported the market on this first go-round. I heard on CNBC and Bloomberg people talking about the 50-day moving average giving ground, and that triggered a lot of events. I call that the 45-day, the way that I do my work. In other words, I use 5 days shy of them. And I found that has worked better for me over time. But the herd uses the 50, and I pay close attention to it, and it did. It buckled, and then you came down to the 100. When we go to the Russell, you know this has been one of the weakest of the markets. I think I've said that consistently. And you've been lower highs, lower lows, so a big correction. Welcome is all I can say to 2018, when everything was rosy in the market for whatever reason. I frankly don't know the reason. But the market certainly put on a correction. And I'm not convinced that every break or every rally needs to have a reason. I think they happen on their own. And what set this, I can't get away from when I read at the beginning of the year, knowledgeable traders were abandoning VIX strategies because they hadn't worked in the past X period of time for them. That's exactly when you want them. And people lose sight. If you're hedging via a VIX, not speculating, hedging, you want to lose on the VIX. Why? Because your other portfolio is making up the difference. You buy auto insurance. Do you want to use it? I don't think so. You have home insurance. You want your home to burn down? I seriously doubt it. So insurance is meant to be lost, but it's God help us if you don't have it, because what happens? And that's the theory. So when I read that at the beginning of the year, I wrote about it and said it's like guarantees a problem. The one thing I did accurate, and I'm proud of myself, is I had kept saying, I think this market has formed a bottom here, and it's now searching for whatever the new trade top is, and it was up there on Wednesday. It slipped back, but we still had that higher top. And as you can see, on Friday, the market comes out and it finishes over the upper Bollinger Band. Yes, it is starting to get overbought, but I don't think you could get away from the fact that all this sideways action has acted as a base. And if the market leaves it, it's a heck of a base that you get away from. You have left that base. I seriously doubt any time in the immediate future we're going through these lows. Can it happen later in the year? Yeah, I'm talking the immediate future. No, I don't accept that. That market's doing something different. Let's see if I can get our next chart right here. 10-year notes. You had a mini panic as the markets fell apart with the biggest loss in the Dow Jones in terms of points only in one day. And when people hear on TV, 1,400 points, believe me, they're panicking. A futures trader has to still look at how much per point is that. And it's a huge drop. It's what, $7,000 or a huge gain if you were short, either way. But what happened here is until we take out this low now in the March 10-year notes, I want to stick my neck out and say until that's taken out, the market's trying to put in a trade bottom. Take it out right away? I'm wrong. You haven't lost the embedded reading. I'm anticipating that's tomorrow. If you don't, the traders are going to sell right into this 18-day average of closes at 122.05, probably looking to cover shorts in that general area. Get up and over that number, the whole world changes. What happens tonight? Tonight what's going to happen is the foreign markets are going to open, and be it the Nikkei, be it the Hang Seng, the Asian markets will be the first, and they're going to look and see that America went down nearly 10% overall on this break so far. Certainly today about 6% in a number of indices, and they're going to react to that. They'll probably drop. I wish I could tell you I know. I don't know, but they're probably going to drop. That could put pressure on their currencies and lift the dollar a bit more, maybe to the 18-day average of closes. As you can see on the dollar index, let's go back to Thursday. Here you were embedding. You lost that embedded reading on Thursday, which puts into play price and the 18-day average coming together unless it re-embedded on Friday, which it did not do. This is where it's at now. So I'm looking for those two to come together. Does it mean the overall trend in the dollar to the downside is over? It does not. But when people get nervous, they run for a few things. They start dumping the eurocurrency. You can see that you're now going to correct an overbought condition one way or the other. I don't know how it gets done. Could fall the 18-day average and go sideways. Not worried about that. British pound slipped back through everything, put itself now into lower highs, lower lows. It finished the day today at 140.23, still over the 18-day average, but momentum has turned down. The Japanese yen should have gotten a strong bid. Why? When you get a market correction of this size, people get nervous. They buy bonds. They'll buy gold typically. They'll sit up here and they'll buy a currency for whatever reason. They believe the yen's a safe haven, and they ran to the yen. Now, while you see it up 46 points, that's the settlement at 230. It was sharply higher than that. It was closer to the day's highs at the very end of trading. So I wouldn't be surprised if you're up another 30 to 50 points right when the market reopens. We'll see if calmer heads prevail, but that's what it was doing. But always got to remember, the futures markets and the stock indices close at 3:15 p.m. Central Standard Time. Currency settlements, I think, are right around the 2:30 time Central Standard Time. Bitcoin got under the 7,000 level. I did for TikTok today on Bloomberg. On Mondays, I'm a Bitcoin expert for them. And I said we had original counts down to the 8,200 level on what we call our price counts. You're exceeding that, and that's fine. You're going to get into a zone overall where the market finally gets regulation, gets itself where countries aren't beating it up every single day saying that they're not going to allow this, they're not going to allow that. And remember, at the price that it got to as a low today, under 7,000, that's almost a 2/3 drop in value from the peak of what? December, January. It sounds so far away. Markets lost that kind of money. On the Brent versus WTI crude, I've been saying over and over that the play hasn't been on the Brent or the WTI themselves. It's been on the spread difference, which is now, as you can see, down to the $3 mark. I think you're in a zone where there's probably not a lot left. If it's $1,000, if it's $1 a barrel to ship, I think that's what it runs, 1,000 miles, and you got to ship to Asia. you're probably getting to a zone where that differential's about there. In the Brent crude, this is a breakout to the downside. You have to get back over the 70 level in order to say that this market isn't trying to push out this market to the down. Admittedly, it's oversold. Therefore, it's fraught with risk by selling under the lower Bollinger Band, which you're under by 63 points tonight. I do think the pros, though, will try to, on rally, sell that market. WTI, same thing, but not oversold. Bending down, lower highs, lower lows, under the 18-day average. You have to go up and take out that 66.30 level in order to tell me different. Rebob gasoline hit its first support, the lower Bollinger Band, in quite a while. The trend is down. Momentum and bias are still down. Nat gas gave up everything. You talk about getting your butt handed to you. The guys that went short anywhere here had to ride it up here, and all of a sudden the market just falls apart on them in 4 trade sessions and just goes way from 20s into right now the 270s. I've seen violence. This is violence at its very finest. As you can see, the boards are all cleared. Our staff is going to be writing like mad on all these markets over the next 24 hours, as you can imagine. If you're not one of our clients, you don't get this. But if you haven't tried what our Linn Associates research is for our clientele, there's a way to do it. We'd like to give you a couple of weeks free access to it so you get to see what it is. And yes, folks, you can choose from any of these categories. You need to get every one of them, and you'll be kept up during the market. It all comes to you by email. How do you get it? Call us. You can go to our website, as you see right here. You can click up here if you're watching me on YouTube, or underneath us on any of the websites. Click there for Ira's free information. Sorry I'm so long, but there was a lot to say. I'm Ira Epstein. Try to weather tonight, and I'll see you.